All right, welcome back. Carvana is rallying again today. We highlighted it's being added to the S&P 500, as you know, and it is updated now. The spotlight shining on it on the best stocks in the market list. I said the other day, I think it was, Josh, that the story from, what was it, mid-20, like 23, back it up, like 3 years, I think we showed.
December
from the
of 22.
depths of 22 into 23 until, and you told me then that it was going to be added to the S&P 500 before 25 was out. I said, you're crazy. And here we are.
I would not have predicted that with the stock selling below $5 per share and every short seller pointing out rightly all of the flaws financially with the company. But the thing is, they somehow pulled it out because the consumer has shown an appreciation for the way Carvana sells cars. And like in the end, if you have the customer, you could probably figure out a lot of your financial problems. So that's really the story with Carvana. And I think this was the first one we ever wrote up for best stocks in the market list.
Yeah, May
at CNBC Pro.
May 12th.
Right. So I think this was either our first one or our second one. But the point I wanted to make is when we first put a spotlight on it in May, it was in a 27% drawdown from that 2021 high. Like, it was not a winner overall, but there was something about the trend that was undeniable. And now you see what's happened since. The stock added to the S&P 500. And we're wrong all the time on that list. Like, we will spotlight a stock and it won't work. And we always, every time we write something, there's a stop loss, there's a risk management idea along with it. Because this game is not about batting average. It's not how many times do you write. It's how much do you make when you're right and how much do you lose when you're wrong. And I think having risk management is really important so that you can take small losses and you can ride the big winners. And Carvana, I think, exemplifies that idea. So we brought it back out today on the list to just talk about it.
I'm going to pivot you in a moment to a new one that's on the list, but just give me something quick on Carvana.
I agree with Josh, what Josh just said. We bought it at the end of October at 305. I think you have to be careful with Carvana thinking that it's a play on rates, because actually higher rates, sustained higher rates, and that's what we've had for the last 2 years, helps this company because it pushes more people into the used car market. That's allowed them to capture significant market share from CarMax. And this company has now profitable, which is absolutely phenomenal from where they were in December of 22 at $3.50.
Yeah, I mean, it says a lot about the consumer, which obviously, Josh, you continue to believe in, which leads me to a couple other names. A new best stock is Delta Airlines, added on December 3rd.
Yeah. So this one, I'm not ready to pull the trigger on Delta yet, but I'm going to talk about Delta and Expedia. I like the chart on Expedia a little bit better. Delta looks like it wants to break 70. You can see that 70 has been pretty substantial overhead supply or resistance, however you want to look at it. At a certain point, I think this one gets through, and that's probably where I get a little bit more interested in it as a trade. Expedia, I think, is viable right now. But the story that I'm telling here, very simply, the media wants for there to be some confirming evidence that the consumer is faltering. The consumer is slowing down. They're practically begging for it. When you listen to people interview the head of Delta, the head of Expedia, they're like, yeah, but isn't the consumer hurting? And the reality is that they're not. On December 1st, we just had an all-time record for the most passengers screened at an airport in the United States in a single day. 3.13 million people went through TSA on that single day. That is above every historic peak. The cruise lines are confirming this. The airlines are telling you no problems there either. RevPAR at the hotel chains, absolutely fine, 85% or higher nationwide. Every category from economy to luxe. So the companies are telling you that the consumer is not only not slowing down their travel, in some categories they're accelerating. So I like EXPE as a best stock in the market. I think it goes, and Delta, maybe. We'll keep an eye on that key resistance level.
All right, Belsky, you have both.
Yeah, we own Expedia in the mid-cap portfolio we run. It was either by that or Bookings. Bookings was much more expensive. It's a $170 billion company versus Expedia, a $30 billion company. And I'll do you one better, Josh, on your chart stuff. You look at a near-term chart, looks like an old-fashioned cup with a handle chart, about ready to break out, which I learned the business.
Look at you.
You like that, baby? Oh yeah, here it comes.
Guy opens his own shop and gets all technical on us now. right? Now you're a technician, using those 30 years of experience to branch out.
You like that? You can teach this old dog new tricks. But also, too, on Delta. I mean, Delta by far is the best in brand, best airline in North America, if not in the world, best operator. We've owned it for a long time. I think Ed's doing a great job there running that company, and we're going to continue to own that.